Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Their best days are behind them. Those may be the 6 most damaging words to your portfolio, and hardly a day goes by when they don't hinder you from making money. Especially when we're talking about the Magnificent Seven. So many people trade these great stocks rather than owning them. And then you get a day like today where the Dow inched up 49 points, S&P advanced 0.47%, the record high. Tech-heavy NASDAQ gained 0.94%, also to a record high. Days like today remind you just how lucrative it is to simply stick with fantastic stocks. Buy in homework. Stop trading, people. See, there are so many jumpy shareholders because lots of people truly do believe that the best days of all of the Magnificent Seven are behind them. Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla. They think they missed the big moves that got these stocks to the heights that they've reached. They are either hanging on now for dear life, clinging, or they exited, failing to get back in, even though they said that they would. It's an odd judgment. After all, when we came up with the term FANG, which stood for, at that point, Meta, Amazon, Netflix, and then Alphabet, a dozen years ago, all I heard was that I was late and the best days were behind them. A dozen years ago. Same thing when I added Apple to the mix with FANG. Late. That's what I was accused of. Let me say this. I believe that if management hasn't changed or there's been a smooth transition, the seven still present incredibly compelling valuations even now, some better than others, but that's okay. And when you look back at how they've done historically, you see that they, for the most part, turned out to be very inexpensive in retrospect. Why do these companies keep exceeding expectations? Why were their best days in front of them, not behind them, for more than a decade of catcalls? I want to generalize for a moment. First, all these companies have tremendous balance sheets with essentially all the money in the world. That allows them to innovate. It allows them to do battle with competitors and win. They can buy whatever businesses they want. Even when the government goes after them, the government tends to fail. Second, they have scale. They can expand with more tentacles anywhere. They're incredibly hard to take on. Third, they reinvent all the time. Facebook starts as a desktop entity with a stock that flops after it goes public, but then it figures out the cell phone for Instagram and for Facebook, and then boom. And, of course, it buys Instagram and it buys WhatsApp. It became a totally different company, taking advantage of its balance sheet and its vision that billions of people want to connect via Instagram. And they were right. Just consider what's going on just at this moment right now. We have the next part of our show is going to be an interview with Apple CEO Tim Cook in Harrodsburg, Kentucky. Now, you may not have heard this, but the Apple Watch has been approved by the FDA to detect hypertension, the silent killer, the leading cause of death. Why? Because it can't be detected. I remember when the watch first came, I went to my cardiologist, and I asked him if the watch could ever be used to flag hypertension. He told me that many are trying, but they most likely couldn't succeed. It would be too difficult, too many false positives, not a lot of accurate reads. Well, you know what that was? It works. It could save millions of lives. If I were a healthcare insurance company, I would make it required wearing for my customers, especially for the big institutions that I give insurance to. Fourth, something good always seems to be in the works when it comes to Mag 7. Last Friday, Elon Musk, what did he do? He bought $1 billion worth of Tesla. I mean, come on, that's incredible, right in the open market. I have never seen a commitment like that, but this is the kind of insider buying you can see when your CEO is the richest man in the world. Now, some of today's strength in tech really has to do with still one more celebration of the data center. There have been lots of questions about whether the backlog is real post that Oracle news, but they seem to have been resolved to the point that it is positive, and demand looks very strong. Microsoft's Azure, Meta's AI, Nvidia's chips, Tesla's autonomous driving, Google's Gemini, Amazon's web service would all seem to be big beneficiaries of that demand, meaning that they're probably doing so well that you see the input, which is the demand. This weekend, Gemini, the chatbot that many thought would never amount to anything because it's connected to Google, well, it became the most downloaded iPhone app. It passed ChatGPT this weekend, which had been at the charts endlessly. It was breathtaking. The positive news flow never ends here. And yet people are so quick to give up on these stocks, as if their biggest and best days truly are behind them. Take Nvidia. This morning I get up, I was a little cranky. I don't understand why the Eagles won yesterday. I fire up the machine and I read that there's a Chinese entity that says Nvidia violated an antitrust law. The stock's down 3, then 4, then 5. I get fed up and I take the X. Quote, usual Nvidia shareholder freak out on suboptimal China news. Join the club and stop panicking, will you? End quote. That was a reference to my own own it, don't trade it policy on the stock of Nvidia. It doesn't stop, though. The stock just keeps going lower, even as we discovered this inquiry is about something from Nvidia's acquisition of Mellanox Technologies, a division that gave Nvidia exposure to high-performance network equipment and not core semiconductor business. That was 5 years ago, and the Chinese okayed it, and yet it caused pandemonium. But what happens with stocks like this? You know, by 11:50, the stock's in the black. You would have caught 6 points if you bought at the low. More important, though, is that Nvidia could bounce right back, even if the stock only closed slightly in the red. That's a sign, once again, that so many are skittish. Nvidia's shareholder base is full of people who probably shouldn't own the stock in the first place, because the moment they hear about a Chinese antitrust investigation, they think they've overstayed their welcome and they sell. That's always how it has been with Nvidia. Always. People who don't know what the company does figure there's no future because they don't even know the past. Look, I know the Magnificent Seven have had their setbacks. Alphabet looked like it was going to be a goner, severely punished for anti-competitive behavior not that long ago. The judge in the remedy portion of the trial, after Alphabet had already been found guilty of being a monopolist, could have easily gutted the company, which is why its stock fell as low as 140 in April. But it didn't happen. If anything, it was real clear that Google's remedy was to keep doing what it was doing for the most part. Now the stock's at $251 and change after soaring another 4.5% today. I made the mistake of selling the stock for my travel trust. I play with an open hand. I believe that the government would come down on them with a hobnail boots. I did think Alphabet's best days were behind them because of what was going on in the federal court. I was totally wrong. Got that? I was wrong. No company is completely in control of its own destiny, but these 7, they come as close as anyone ever has, which is why I believe that their best days are still in front of them. Yes, if you don't own them already, maybe you missed a huge amount of performance. I'm not going to deny that, but I'm not going to say that you're too late. I think there's too much good happening to consign these stocks to the dustbin of history. They just don't have any quit in them. The bottom line, Magnificent Seven are heroes, and I'm not going to tell you to sell heroes unless something changes that makes them feel a lot less heroic. That hasn't happened, though. They're still got great management. They still are overflowing with cash, and their scale is so enormous that no one can stand against them. What's not to like? Cody in Illinois. Cody.
Booyah, Jim. How's it going?
I'm doing fine, Cody. How about you?
Doing great. I love watching your show with my girlfriend's dad, and excited to be talking with you.
Sensational. I'm glad you called in. How can I help?
I'm wondering what's going on with Toast, Jim.
You know, look, I'm glad you asked about this. I actually thought the quarter was excellent. I know there are a lot of doubters. I think that's wrong. But the restaurant stocks have been very weak, and that's why I think that Toast has been very weak. I'm advocating patience, because it's still a great stock and it's still up a lot for the last for this year. How about we go to Nathan in Colorado? Nathan.
Hey, buddy. First-time caller, long-time listener.
Excellent. How can I help? What's up?
I'm calling about a stock I've been holding for about 3 years, trading at prices 9 years ago, down $100 in the last year, plays a dividend over 6%. United Parcel Service.
I am worried about United Parcel. I'll tell you why. It's down 33% for the year. Because when I see a yield of 7.8%, it worries me because there's not a lot of yields in the S&P that are that high. The highest yielders tend to be trouble. They do not tend to be reasons to buy. We maybe for Verizon when it was or an AT&T because they're utilities, but this is a grave consternation to me on UPS. I wish I could be more positive, but that's how I feel. John in California. John.
Howdy, Jim. John from Norfolk. Listener since '98. Thanks for the education.
Oh, wow.
Group and the rate cut.
For which stock?
Citigroup.
Citigroup? Yeah. Oh, I like Citi. Now, Citi's up a huge amount, But I think Citi is still an inexpensive stock. It's got still a lower multiple than others. I think it can go higher. Yields 2.4%. And what can I say? Jane Fraser's doing an admirable job there. Anyway, look, there's just no quit in the Magnificent Seven. And I don't think you're too late to get into these names. There's too much good happening with each company. On Mad Money tonight, Chewy plummeted after earnings before climbing back after catching a couple of upgrades. I'm sharing where I think the story stands after these conflicting headlines. Then I'm hearing how a partnership with Nvidia is ushering in a new AI era for Jacobs Solutions, letter J, with the company's top brass. But first, last week, I visited Corning's plant in Harrodsburg, Kentucky, where big tech meets small town America. But the story doesn't stop at the factory gates.
Welcome, everybody, to Harrodsburg. You are standing on one of the oldest streets in west of the Alleghenies.
Jim Cramer and Tim Cook take a stroll down Main Street, USA. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.